And so now, in keeping with, I guess, the times, we're going to transition to our last two pitches, which will be done online. They'll be pitching from their respective locations. So this team is coming from Singapore. This is GigaCover, the future of independent worker incentives and benefits.
Hi, everybody. Can you hear me and see me? Okay, great. So I'm hearing a lot of feedback because as I speak, the speakers are also broadcasting. But I'll go ahead anyway. Okay, good morning. I'm Emerson. I'm the co-founder and CEO of GigaCover. Thanks for having me here today. So GigaCover was founded in 2017 to build the future of independent workforce incentives and benefits. Now, independent workers come from many occupations, from blue collar to white collar. So this is anything from mobility to services, contract workers, sales agents, and also creatives. Many more millennials are choosing to go independent versus working for big companies. Now, this makes up a large portion of Southeast Asia, 20 to 25% of the population. But they actually share the same pain points. They have lack of access to group protection, and they also have cash flow problems. So GigaCover is meeting these needs by offering flexible insurance and early access to earnings. And we do this by offering in two ways. There's a subscription into the GigaCover membership program. And this gets you coverage as well as outpatient healthcare access. And then we also have add-ons where users can purchase on their own or for their spouses and dependents. So that's like earning advances which you can apply for, or supplementary insurance that might be occupation specific. Now, what's different about our products is that they're all more affordable and flexible than what you can find in retail. So we help businesses drive performance and compliance, and we work with a range of businesses from tech platforms like Gojek, Lalamove, Homage, but also traditional businesses like sales agencies, outsourcing firms, logistics. You know, most businesses who use independent workers tier their workers on loyalty, work done, job performance. So we match our offerings with their worker tiers. So the highest tiers get more, the lower tiers get less. Businesses use us to reduce their churn, improve productivity, particularly with non-cash incentives. And in return, I get access to many workers, users, with lower CAC. All right, so in the long run, looking ahead, we want to grow into the region's incentives and benefits system. And we have plans to build up both the financial products, right? We're focused now on anything associated with earnings and income. But we also want to get into inpatient health, investments, credit cards. We may not be doing this on our own, but more on a partnership model. But building this ecosystem of products out is important to us. And the second part is we also want to get users involved in formal systems, formal credit, formal social safety nets. Right, so I believe we have the right team to execute on this. I spent some time in Silicon Valley. With Palantir and Pivotal.
Hi, Emerson. Can we can move on to the judges Q&A now.
Okay, sure.
Your time's up for the pitch. Yeah.
Hi, Anderson.
Hi, sorry, I actually can't see you, so I'm just gonna hear your voice and just speak. Sorry, can you say that again?
Can you tell us about your team? Speak to the slide that's up, please.
Oh, perfect. Okay, yes. So I was going to say that, I had spent some time in Silicon Valley. So I had some startup experience. And my core team, we're divided into countries, and I have country managers in each country, Singapore, Indonesia, and Philippines. And they all come from similar startup backgrounds with a good amount of hustle and good amount of drive. Now, at the advisor level, we have the CEO of Aeon Asia on our board, and also the fintech partner of Ernst & Young. So we've got the insurance and finance sort of subject matter expertise locked down. So I believe we have the good team here to execute on the two core parts of our product now, which is insurance and financing.
Can you explain how, because you have some pretty formidable competitors, right? Grab, Gojek, everybody has their own financial platform where they're selling insurance to their drivers. Why do they come to you? How do you price your product more competitively than them with such a big entrenched customer base?
Yeah, good question. So Grab, Gojek, and many of the other players are also attacking financial services. But their vision is to attack it from their captive user base with a B2C approach. And that means they're facing, B2C risks, B2C collection risk, and also B2C sort of insurance risk. There's self-selection risk when it comes to B2C. So for us, we work through groups, and that's something I don't think the big companies will go after because it takes some client servicing. So the groups in our case offer compulsory buying that improves the risk ratios, that helps us to detect fraud. And also for the financing pieces, because we collect from the groups, then we face a different kind of risk, not consumer credit risk, but much lower sort of business collection risk. So that's how we're able to deliver much better pricing and also much lower interest rates or admin fees, right, for the financing piece.
Can you give us an example? What are these groups? Just illustrative.
So as for this slide, we work with tech platforms like Gojek, Lalamove, Ritasi. And then in Indonesia, Chocolate Factory, some outsourcing agencies, right? So an example, if I were to approach one of these clients, I would say, well, you have a worker tiering system. So you can match your tiers with my subscription models or my subscription memberships tiers. And because they buy it in bulk across everybody in the top tier, that's a much lower risk. At the same time, they do some kind of earnings advances. I forward the money to the workers, but I collect from these businesses at the end of the pay cycle or when the invoices are due. And so I collect from the business, and that's not consumer credit risk, that's much lower risk.
So from a business model point of view, can you just go a little bit deeper into how you make money, top line, and what your bottom line looks like at this stage?
Actually, could you just flow that through in terms of how you share with these platforms also, so we know? Yeah, perfect.
Yeah, okay, so this is the waterfall model of the various variable costs. So for subscription fees, now we have a few tiers of membership, but essentially you'll be paying for adding workers into our group policies. So one thing different about GigaCover is that we own the group policies for various kinds of protection. So we in fact act as a client to insurers that reduces the need for us to be licensed. So I hold the group policy for earnings protection, personal accident, critical illness, for different amounts of coverage, of course. So if you're in a higher tier, then you have a higher amount of sum assured or daily income payout. And so that might cost you more in premiums, right? So if you take the current numbers here, then we're looking at a contribution margin for subscription fees of about 20%. Now, the other major add-on product we have is earnings advances, and we charge an admin fee that is tiered depending on the amount of money advanced. So there are 3 tiers, separate admin fees. Similarly, we have costs, transfer costs, ops costs, but the biggest one is that we are borrowing from a line of credit, right? This is with a range of providers, peer-to-peer lenders to banks. So we pay an interest rate, but we also collect admin fees, contribution margins roughly 35%.
Does this take into consideration your customer acquisition costs?
Yes, this would go into ops and marketing.
So how much is that?
So our average customer acquisition cost now is about $2.50 in Singapore and less than $1 in Indonesia.
Let us know. I guess this isn't. Can you let us know? For one of I guess a client that or a platform that you guys have worked with for 6 months or more. what percentage of their workforce is actually onboarded with you guys, or what percentage of that workforce uses your services?
Okay, for a typical client, they would enroll their top tier into our program. So probably the highest tier of membership. And then the second tier gets, the second tier membership. The third and fourth tiers probably will not get added. And instead, they have access to buy these subscriptions and add-on products at the same prices. Right, so first two tiers sponsored, second two tiers not. Now, first two tiers roughly anywhere from 25% to 35% of the user base. And then from the remaining 50-60%, roughly 10 to 15% convert, so they buy on their own, or they take on an add-on product on their own.
And so has that been the case then for a Grab or a Gojek, for example? I mean, 25% of all of their drivers and couriers are onboarded to the program already?
Yes, so that is the case for Gojek, which is our biggest client. And we're seeing that also for some of the newer clients we're signing up. It really depends on the industry norms. So for the tiering programs, the impact of COVID on the industry, because the worker tiers are defined, and it really is up to the workers, if they are working for this business, whether they can meet those tiers to get into those levels of benefits. Right. So, for example, in Singapore during the circuit breaker, many workers dropped off the top tiers. They were just unable to drive that much. Whereas in the food delivery space, we saw that more workers were able to get into those top tiers. Right. So we do see fluctuations in the number of workers covered.
Sorry, just on your customers, can I just have a little feel for Gojek in particular? What percentage of your overall revenues does Gojek represent? And then your top 3 or 5 customers, what sort of concentration you have now?
Yeah, so Gojek was our earliest customer, and right now they still stand at about 40% of our revenue. The next biggest player would take about 20%, and then the third probably 10%, and then the rest, it's just really the long tail aggregation.
So how do you avoid concentration risk at this stage?
So one of the things is that instead of sponsorship, or instead of driving sponsorship at the client level, we're trying to drive more self-purchasing of the subscriptions from the users, so making it more attractive from the workers themselves who are not in the top tiers to buy, right? The workers are not tied to the platforms, they move around. So even though they may come from Gojek in this quarter, they may work with somebody else in the next quarter. So as long as we have acquired the users, they're probably going to be mobile, and so we can count them as acquired customers even if they move out of Gojek. And if we can drive this, my projections is we're seeing more even spread between sponsored subscriptions and user-bought subscriptions, and that will ease us off the concentration risk of clients purchasing. That's one. Then the second part is, of course, we're going after more clients of similar sizes in all the countries, right? And so that will help us diversify away from a couple of large players.
What's between contribution margin and net margin?
So everything here is variable costs. So after contribution margin, it would be fixed overheads like group level, salaries, rent, that sort of thing. So overall,
you outsource everything right now in the sense of you use another third party to give you funding for the earnings advances and for the insurance, and you guys don't do it yourselves, right?
Right. So for the insurance piece, we act as a group policyholder. And so we say we have the 50,000 users. We want of these age ranges, occupation ranges, and we find the best price, right? So we get a rack rate for these prices. That's this stuff here. So we don't take any risk if the claims exceeds the premiums paid, right? That's on the insurer. But we have, of course, an incentive to ensure that this risk pool is well maintained, so that our cost of goods sold is managed. And on the advances side also, yes, we have a line of credit, but then we are responsible for the risk. If we don't get paid, we don't collect, we still have to pay off the interest on this line of credit.
Judges, we have less than 2 minutes left, so one last question.
We saw another insurance player today, and they actually went ahead and got a license and become an insurance provider. Is that an aspiration for you, or are you going to stay intermediary?
No, so that's not an aspiration for us. We feel that our core is building out an incentives and benefit system. That's these products, but also the software and operational software around it. So it's what the clients use to manage the worker tiers. It's what the workers use to manage the benefits. So that's our core. In those core financial products, however, we currently don't see a need to take on the full stack. I think the innovation and the support we're having now is sufficient. There might be a point where we cannot innovate any further and we'll need to take on supply. But I don't think that inflection point will happen until we hit 25 or 30 million GWP.
Great. Thank you very much, Emerson. Thank you very much.
Okay. Yeah. Thank you.
Thank you, Judges.
Okay. Yeah. Thank you.
Thank you.